First up, we have CSB Bank. That's the corporate on our radar today. Their net interest margins improved while the gold business performance was also strong. Slippages have declined, which is very positive, and loan growth is also robust. Pralay Mondal, the Managing Director and Chief Executive Officer at CSB Bank, joins us now to talk about that. Mr. Mondal, thanks a lot for joining in. The loan growth was very strong this time around. Can you tell us what would the overall loan growth look like by the end of the year in FY24, both on the gold loan side and ex of gold loans?
Good morning, Sonia, and good to be back on your show. Yes, we had a growth around 29-30% this quarter, and that has been a strong growth. We had predicted we will grow faster than the system by 50%. We have done slightly better than that. The way the next few quarters are playing out, I think we'll sustain the level of outperformance on the loan growth. And obviously, if you have to do a good loan growth, we have to have a growth on the deposit franchise as well. So I think we're all set for a good year.
What could you quantify? What could a good year be, sir? Both on the loan growth, I think mid-20s is what we were talking about earlier in terms of a loan growth. So do you maintain that? And also on the corporate book, there's been a bit of a degrowth on a sequential basis. So how do you see that move up as well as your core? The big focus has been on gold. What kind of a growth are you looking at there?
Good morning, Nigel. Yes, I think we had given an indication around mid-20s. I think we'll hold to that. And if you're lucky, we can do better than that as well. On the composition, I think wholesale, what happens is one deal here, one runoff here, etc., can make a little difference, and that can change quarter to quarter. But overall, I think the mix broadly remains the same, and gold loan will continue to do well for us. As I said, that till FY25, the gold loan will continue to be our mainstay. Having said that, 25 onwards, I think the mix will start shifting more towards retail and SME. And by FY 2030, as per our SBS 2030 vision, we'll have retail somewhere around 20% and SME somewhere around 30%. So that's a long-term trajectory, but immediately, you're right, we'll be on track on what we are progressing on.
And maybe a little better, Pralay, right? As you said.
Hope so. I mean, with your good wishes, we should be able to do better.
All right, got that. And deposits were down on a quarter-on-quarter basis. Could you talk to us about that? Are you shying away from taking on bulk deposits?
Yes, Prashant, good morning. What you said is absolutely right, that in the Q3 and Q4, we picked up a few larger deposits, and rates were at a peak. So we are letting them go because we strategically took those deposits for the short term. And that is where you'd see that LCR is getting impacted a little bit this quarter because those deposits are going out, and we are letting them go out because we are not renewing them at those rates, because we want to have a more stable cost of funds and cost of deposits. So from that perspective, it is a tactical play, and that has played out well for us. And right now, granular deposits are coming in at reasonable rates, so we should be able to hold on to it.
Okay. On the asset quality side, I think what the street definitely likes is the fact that slippages have fallen. They're down almost 6% compared to last quarter, and overall gross NPAs have also improved. Is this a trend that is sustainable over the next couple of quarters?
I think at least for this year, I don't see any reason why we should have any major surprises there. 1.27% and 0.32 on the gross and net NPA side, which has gone below where it was last year, same quarter. I think we'll be able to sustain that, and credit cost will be somewhere around neutral to negative to positive zone. So it would not be material that much. So I don't see any reason why we will have any challenge on our GNP and NPA or credit cost.
Okay, all right. Final question then. It's a two-part question, Mr. Mondal, before we let you go. Good to see your NIMs above that 5% that you have been maintaining, close to around 5.4%. What's the trajectory from here on the NIMs? And your cost-to-income ratio, that shot up. I recall you telling us, that it's likely to come back towards that 50% odd. By when?
Good morning, Nigel. Yes, I have told it before. Again, I'm telling that cost-to-income in the short run till FY25 will be elevated. And then it will start coming down because in our cost to income in the denominator, there is cost plus investments. Those investments will start playing out FY25 onwards. And then it will move down to around 45% by FY 2030 as per our SBS 2030 vision. So that's on that part. On the NIM side, yes, we had around 5.4, which was even quarter to quarter, it was reasonably okay. And year on year, it is better. But we may have, because some of those larger deposits will play out this quarter, so we may have some kind of a depression on the NIM for this quarter. But coming Q3 onwards, I think we'll sustain the NIM and will remain well above 5%. Our guidance was 5%, and we'll be able to hold on to that.
Okay, all the best, Mr. Mondal. Always great speaking with you. Have a good weekend, and thanks for joining us on CNBC TV 18.
Thank you so much. Thank you.
That's CSB Bank. Very confident there. Let's take